Hello, Uncle Jim here. Today I want to share with you why I think now is a good time to actually be selling put options. I know it's during a bear market and we've had a financial crisis, but I still think it's a great time. I'm also going to compare it to buying stocks and why actually selling put options I believe is a better way to actually purchase stocks. And then I'm also going to share with you some of the trades that I did this week. I've had a really good week. So please stay tuned. I think you're going to enjoy what I have for you. Okay, I've got a lot to cover, so let's go ahead and jump into it. First, I want to give a quick market update. It's been kind of a crazy week, and literally, I did my last video a week ago. It kind of the world has changed to a certain degree. Do I think it's as bad as the 2008 market and what happened? I don't think it's anywhere near as bad. I do think some bankers made some bad choices, and they probably didn't know they were making bad choices at the time. The Fed has increased rates so much in the past year. I think they've had what, eight increases, and it we haven't seen anything like that since the 80s, and I think they did too much too quick. A lot of the banks, especially the ones that have gotten in trouble, had bought a lot of safe securities. They, I believe, had purchased 30-year treasury bonds or something along those lines, and because the expiration or the duration was so long, this increase in rates has, the value of the bonds have gone down so much that it's really impacted the banks. And I also do believe that the Fed didn't do a very good job. They were more worried about taking care of inflation and increasing the rates that they really didn't keep track of what was going on with the banks, which we've seen that a lot with the, bureaucracy in the country, or in the government. They kind of take their eyes off what's really important, and they should have been keeping up with the banks to get a feel for how everyone was doing. So I do think because of what happened that they're going to pivot. This is what was needed to cause them to pivot. Are we going to have an increase next week? I don't think we're going to have a 0.5%. We may have a 1/4%, but I'm actually thinking we're not even going to have a 1/4%. I think they're going to hold steady for a while and kind of let the banking industry catch up, and the regular, all the other industries catch up too. This massive increase in 1 year is a lot to handle. So what does that mean? What does that mean for your investments? Well, right now there's a lot of fear in the market. Actually, a lot of YouTubers are also trying to peddle fear, as well as regular media. I know all the major networks, even Fox, is trying to scare people to death. I've been through this before. I went through this in '87. I went through this in 2000 and 2007 and 8. And the worst thing you could do is sell and lock in your losses. And so I'm taking a wait and see. I've got several positions that are in the money, and I'm just kind of staying put and letting those kind of work out. We're kind of all in the same boat, especially with the bank stocks. I've got Truist and I've got Schwab, and no one would have thought Schwab would be trading where it is, or Truist. I think Truist is right around $30, which is crazy. It was, I think, recently is up in the 50s. So I'm staying packed. If some things do get a sign, again, this is where it's so important to pick the right stocks, from the start, or the right securities. And the ones I have currently that are deep in the money, I want to keep. So I'm probably going to go ahead and let them be assigned. One is LEG, and I like it. If you don't have LEG, it's a good time to look at it because it's just like the banks. It's really low. I mean, it's like a 5-10 year low. So, and it does sell durable goods that relate to the housing market, and I do think the housing market's going to do better maybe in 24 or 25. So a year or two from now, it could be 40% higher than it is now, or potentially doubled in value. So that being said, my point to a lot of people is don't let the fear mongering scare you too much. Sit put. And again, that's kind of a play on words, but a lot of the puts that you may have in the money, again, remember, if you had bought them at the time, and say you picked a strike price of 50, where you were okay with that 50, and if you had bought it at that time, you'd be in the same situation. So say it went down to 40, you would still, in my mind, be in that situation. So just remember the reasons you wanted to buy the stocks in the first place. Now, in those instances where you're selling options like SPY, or like with me with IWM, I'm I'm okay letting those sit. I think IWM is. I've got some 170 strikes, and I think it's pretty close in the money, or close to being in the money for those. But again, once we get a bounce, it's probably going to get back up to the mid 170s, and then into the 180s. So again, patience. Don't panic. Sit back and kind of think through things. Being that all of us are in the same position, with some of these banks, everybody's underwater. Everybody, you know, can potentially be assigned at any time. But because that's the case, I think there'll be fewer assignments because I know for Schwab, if I want to have something assigned to someone, I'd either have to let it pass through expiration or I need to call them if I want to have it assigned early and ask them to do that. I don't believe there's a way I currently can do that. I believe I have to call them if I want something either put to someone or called from someone. So again, just try to be calm. I think this is going to pass, and I think we may get a really big bounce, and we could be kind of off to the races because the fact that the Fed may be pivoting and changing the way they're looking at things may be a real good thing. So that's my 2 cents, and as always, I always like to say that, and maybe it's all it's worth. So let's talk a little bit about the key point today, which is, selling puts versus buying stocks. And I do think you have a lot more flexibility with selling puts. You can generate income while you're trying to purchase that stock. And I had mentioned LEG before, and I've been selling puts on it for 2 years, and now it's going to get assigned now. So I probably have earned $10 per share. So even though I look like I might pick it up at around 45, it's really probably more like 35, my cost basis. So, while you're trying to pick up that stock, you can generate income like I've been doing in this channel. And, if you just buy the stock, you could potentially sell covered calls, but with this, at least with, people who are paying you for that opportunity to sell you the stock. And typically when I have a normal market and you don't have these crazy declines, you can earn some really nice steady income doing it. So, and then also it requires lower capital. So if you're doing these vertical put credit spreads, or if you're just selling cash secured puts, you don't need the full capital of the stock. So if you're, if you look to buy a $50 stock and you need 100 shares, that's 5,000. But you may pay $200 or $300, or you may receive $200 or $300, but you still have the flexibility, and you don't need as much capital at that time. I always like to have enough cash in my account to cover, the stocks that might get assigned to me. But at least you have that flexibility, and you don't need as much capital, especially if you do a vertical put credit spread, meaning you buy a put lower below where you think the stock would go below. And then at that point, let me give an example, because I'm not sure I'm doing a good job explaining it. So again, a $50 stock, you sell the 50 strike, you buy the $40 put, and the stock price goes down to say 35. Well, you have a put, so you can put that to someone at $40. So really the risk is only between that $40 and $50. So a $10 spread. So you're taking less risk. You need less margin and cash in your account if you do the vertical put credit spreads, which again gives you more flexibility. And then you also have more flexibility with how you want to close them. Do you want to roll them? You have more choices to make than if you had just purchased the stock, where you really, the only choice you have is either, at that point, is to sell it. And again, that's what a lot of people do. So that's why there's been a lot of selling. A lot of people, it's hard for me to believe that most people still, buy at the high point and then sell at the low. It should be the reverse. You buy at the low and you sell at the high. And, that's what Warren Buffett does. That's why he loves these moments. I'd be curious to see if he ended up buying anybody currently. I would be surprised. I would not be surprised if he actually did. So, so those are some of the key features: limited risk, more flexibility. You also have the potential to outperform, mainly because it's really hard to, purchase the stock at the at the low point. By selling puts, I find I can pick up the stock at a better price, meaning, if let's use LEG as an example. If I had bought LEG at, $45, $50, um, I'd be stuck with that price. Now with selling the put, I I picked up some cash from that when I first sold it, and I've been able to roll it. Actually, I believe it might have been as high as 50, and I've been able to roll it down over the last 2 years. So so in a way, you can really outperform. And then once you own the stock and you start selling covered calls, and you can do in my mind even better and with less risk. So just wanted to share that. So my preference is, and I still buy stocks at certain times, because sometimes you find that your opportunity with either buying a calls, and that's another thing you could potentially do, is buy calls for stocks that are really good values. For instance, I'm looking at buying some calls for Truist Bank because I believe it's way oversold, and I may buy a call at say 35 and 6 months out, and it hopefully in that 6 months it recovers and it may be worth 45. I could actually sell that option and make a nice profit. So that's something else I'm thinking about doing. So if you're not trading in options, your choices are just buy or sell stock. So here I have a lot more choices. So again, I wanted to mention that piece. So at this point, let's go ahead and I'll go into a little bit more detail, especially when I share the trades that I've done this week. I'll talk a little bit more about this and the benefits of actually selling puts versus buying stocks. So stay tuned. Let's jump into the next part of the video. Okay, I've opened up my weekly planning worksheet. This is what I release to my memberships every week, either on Sunday or Monday. Let me jump into that real quick and just share with you. If you're curious about my memberships, you can take a look below. I've got a $10 membership and a $25 membership. The $25 membership, of course, includes everything in the $10, but it also includes weekly meetings with me, 15-minute coaching calls each week, and they always go over 15 minutes, but that's okay. I really enjoy talking with people. You can ask me anything. You can ask me about my trades, your trades, trades you're thinking about, or even just things in general. If you need an uncle to help you with a dilemma you're having, you can always ask me something related to an event in your life. So if you want to see anything along those lines, I'll have it down below. I also, please subscribe, hit that like button, notify. I'm a growing channel, and the more people who can find me, the more the word gets out about options. I'm surprised how few people are really selling options. So let's jump into my weekly spreadsheet. Now this week I've got favorites. At every week I put out one of these, and I just found this was easier for me to do it this way. So I researched 3 or 4 stocks or securities each week, and I put those in the top. I put strike prices. I put what the delta is, what kind of premium I'm estimating, and then I put a little reasoning why I'm looking at it. The 4 stocks that I have are actually, there are 3 ETFs in one stock. One is SCHD. I've said before, it's one of my favorite ETFs. It's a growth dividend by Schwab, and it's something I'm always happy to own more of, and it pays a nice dividend, and it grows that dividend really nicely. IWM is the Russell 2000. This is what I use to generate extra income at times, and I currently don't have any plans to own it, but it wouldn't hurt me to own some of it anyway. So it's done quite well. It actually is very comparable to the S&P 500. So you could also own IWM as well as the S&P 500. IWM is Russell 2000. So it's made up of more companies, I believe more smaller companies, but it's also done quite well over a longer period of time. So an XLE is the energy sector ETF, and I believe it has gas companies and different energy related companies, and it's done really well. Now it's been down quite a bit, so but again, it's one I like. It pays a nice dividend. I think its dividend may be as close to 4% or a little bit over. And Oxy is the Occidental Petroleum that Buffett has been buying more of lately. So I've been looking at it because it's come down a lot too, and it's at a price that I'd consider buying it. So at the top are just my favorites. Below here are what I've been doing this week. So, like I mentioned, I had LEG. I've got one contract, one at 40, one at 45, which is interesting. The one at 40 already got assigned. It actually got assigned last night. But again, I was okay with that because I was really happy with picking it up at 40. I had sold quite a few puts on it before, so my cost base is probably going to be closer to 33, 34. And the 45 is in my regular brokerage, and it's like I said too, I've sold, I think I've been selling those puts for over 2 years, maybe as far back as 2020, maybe before I even started this whole channel and stuff. So those are the two that and one's already been assigned. So really, you're talking only one contract, and I've got plenty of cash to cover it. So I'm probably just going to let it get assigned. And the reason I'm going to do that is if I closed it currently, it would be pretty much the same loss, but meaning the difference in the strike price and the current price of the stock. So I'd be locking in my losses. So by owning it, I can start selling covered calls and, follow it up. I do believe it's going to recover within the next couple of years, just as the housing market recovers. So next I have XLE, and it doesn't expire to 331. The two LEGs expire tomorrow on Friday, March 17th. XLE expires on 331, and I've looked, I can probably roll it, but I'm going to let it get a little bit closer. So I talk about profitability, and one thing I've gotten to mention in the past, I typically manage my positions 2 or 3 weeks out. So it's going to go kind of like this, meaning the stock prices or the security price is going to go up and down. So I typically look at profitability when it gets really close, or if it becomes so profitable it makes sense to close it. I have been missing out on closing it, when it hits a specific loss. So that's something I'm still working on. So I'm not too worried about XLE. I do think the right now, because of what's going on with the financial crisis, the energy companies are way down. Gas, I think, is way down. Maybe hit a low for 23 and maybe even 22. And that, again, is because of the banking crisis. I do think we're going to have higher prices later in the year. The Biden administration hasn't changed their policy, which is really kind of anti-energy. So my guess is gasoline will go back up, and when it does, XLE will bounce back up above. I think it's right now at 75, 76. I think it won't be long. It'll be back above 80 fairly quickly. Now, these are the trades I made this week. I rolled some Coca-Cola. I rolled and this is something else a lot of people don't realize. These weren't expiring till January 19th of 24, and I was able to roll them because they were so profitable. I actually rolled them from 75. Well, that's not right. It's still 119.24. I'll have to change that at some point. But I just rolled them down mainly because Coke is around 59 currently. So if in less than a year, I'll fix it later. I don't want to slow the video down. So since it was so profitable and it was so far, I believe the delta for the 75 strike was like really, really low, like 6 or 7, versus a 20 delta, which I like to do calls at. So I picked up $300 in cash by just rolling it down, and the required margin. Now I've changed how I calculate margin, especially with Coca-Cola, which is questionable anyway. I did have some people share you should use your cost basis. Now I've owned Coca-Cola so long; it was given to me by my grandfather, so my cost basis is like really, really cheap. It's like $3 or $4 a share, so it'd be like a 25% yearly return. So. So that worked out pretty well, and I end up doing a lot of Coca-Cola. When I first started selling options, that's all I did, and I started selling calls on Coca-Cola probably 13, 14 years ago, and a lot of them were leaps. So it was just another way to make a couple thousand a year with no risk, because I would pick crazy prices, and I really didn't know what I was doing. That's why I kind of wanted to, learn what I was doing. So I would never have made the kind of trade I just shared with rolling Coca-Cola down to a lower price to pick up even more premium. I would have just left it and it would have expired at some point. Now, Intel, these were assigned to me really cheap. Intel's gone through a rough time. So I had closed. Intel went down big time, and some of the cover calls I had before, I closed them. So this is a new trade. I opened up the cover call with a strike of 32.50, which I believe right now it's around 29. It was just shy of a 24 delta, expiring in June. Current price at the time was 28, and I picked up $253. And again, these were 4 contracts. So when you look at the price of Intel times 100 times 4, that's how I came up with 11,200, which this translates into a 9% yearly return. So again, with cover calls, I'm just trying to double my dividends, and that more than doubles dividends with Intel. Intel, though, it's paying, I think, at 4.5, almost 5% dividend. XLE, I did another trade with XLE. I did this yesterday. Or was that no two? Yeah, yesterday, and it's a vertical put credit spread at 66.56 with a 17 delta expiring in May, and I believe at the time it was right around 76, I believe. So it's pretty far outside the money still, and I believe it's just above the 52-week low. And I picked up $207. That's the required margin. Again, when you take the spread, which is 10 times 2 contracts times another 100, so it ends up being 2,000 minus the premium that I'm bringing in. That's how I came up with 1792. And then the yearly return is 65%. Again, primarily figuring out how much left of the how much is left in the year. Let me move this, and you can actually see the calculation. So it's T27, which is this divided by this, and then by how much is left in the year, so based on the yearly amount. So brought in 207, which is a 65% return. And then today I just did a Truist, mainly because Truist is so low. I have another contract that is in the money. It's, I believe, 45. And I did a vertical put credit spread at 25, which you got to understand, kind of like with any of these banking stocks, it was literally a month ago at $50. And Truist, I believe, TFC it's still doing well. Its dividends look good. They're safe. There are a lot of people coming out that it's a screaming buy currently. It was a little bit of a higher delta. Now the delta is a little confusing because it dropped so much. Its lowest strike is 1750. So I couldn't go any lower strike wise, but that's okay. That means I have a $7.5 spread between the 25 and 1750. And I'm not too worried about the delta because if I can pick up Truist at 25, it's like an 8% dividend. I'm perfectly happy with picking it up. It expires in June 16th. I picked up $259 for that. Again, since it had a smaller spread, it was $1,500 minus the $259.40. And that's an 81% yearly return. Now I'm actually playing with the idea of buying some calls too on Truist. Again, I bank with Truist. I really like Truist. I've been working with Truist pretty much my whole life. It was originally SunTrust. I think it was SunTrust and BB&T, and they've just recently done a merger, and they finished the merger earlier this year. So they're going to have some costs come down. Again, I just think it's a screaming buy, and I'm probably going to buy some puts. But you do your own due diligence. If it makes sense for you and you like Truist, then you might want to look at it too. And that's the case with not just Truist. It's the case with some other stocks. So other banks as well as some other stocks that have been hit hard because of the banking issues and the higher interest rates. So for those 4 trades, I did 1,021, and I have potentially the ability to do another one. I've been doing one a day, and this week I'm doing over 250, almost 255 per trade, which, let's see, for the month I'm already at 3,077. So my guess is I have 2 more weeks left. I should have one of my highest weeks ever. I may even get to 4,500 or 5,000 for the month. Um, so that's it. That's what I've done this week. Again, I like to try to do one trade a day. This isn't all I do. I'm also a software developer, and I'm working on a minimum viable product for another client. So as I can jump on and make that one trade and go on and do my coding, do the meeting with my clients. Um, I don't have a lot of time, and that's why I do things the way I do it, because I want it to be passive. And even with my development work, it's what I like to do. And I don't work a full-time job with it. I work probably between 15 and 20 hours a week. And once I get past that MVP and they've got a working product, then it's just going to be maintenance. And I might just do the channel full time and do less coding, because I've been doing development and coding for almost 30 years. And I still enjoy it. I might actually code something related to my channel and working with these trades. So hope you enjoyed that. As always, I love to answer comments. Leave me a comment below. I try to answer them all. So, and with that being said, be safe out there. Again, don't let the media scare you to death. And hope you have a great day. Thanks for joining me.